Good afternoon, everyone, and welcome to Stock Market Today. My name is Ken Shreve. Today I'm joined by news editor Ed Carson, and on today's show, well, a pretty interesting day for the market. We had pretty cool reading on consumer prices before the open. That put stocks in a really good mood, but then a somewhat hawkish Fed after the two-day Fed meeting concluded. So we're going to go over all of that. Pretty decent gains for the Nasdaq and the S&P 500 today, but let's throw it over to Ed, who's got three stocks to watch.
Want to take a look at Booking, Fair Isaac, and KB Home, which made some moves during the day, the morning and in the afternoon.
Yeah, those home builders were looking good when rates were plunging, and a lot of home builders gave those gains back. So why don't we start by looking at a chart of the Nasdaq here, Ed? I see the Nasdaq composite ended with a gain of 1.5%. Issue with the Nasdaq here is that it's starting to look a little bit extended.
Yeah, it's a little bit odd. We have the Nasdaq that even when it's closing off the highs of the day, up 7.4%. When you get more than 5 or 6%, you start worrying. It's starting to feel extended from the 50-day line, and that just means that there's a higher risk of a pullback. We can keep getting more extended, but the more you go up, the higher the risk of a pullback, and the higher that the risk that the pullback might be more serious. So it's just something to watch. It's just one of those things like a yellow flag, not a big, gigantic red flag. But just something to note. Generally, it was yeah. So there's that.
So the market was initially enthusiastic about another soft reading on consumer. I shouldn't say another soft reading on consumer prices, but consumer prices eased a little bit. I guess that is making the Fed somewhat happy.
Yeah, and part of the interesting thing is that what came in is that, yes, the market comes in, surges on this. I'm just going to show on a 5-minute chart. You can just see how things really took off on this tame inflation data, and then held the gains, and even held the gains with the Fed. And the Fed came out today and said, you know what? We're just going to cut rates one time this year. That's down from 3, and the market expected 2. And so you would have thought that would make the market sell off. But there are reasons because of that tame CPI, and there were some of the reasons why the Fed gave. The market was thinking, well, maybe you'll still cut rates. In fact, the markets, the last time I checked, were still leaning towards 2 cuts in 2024. But interesting enough, so we actually were building gains, but then it faded late in the day because I think Treasury yields were coming up. But still, all in all, given how hawkish the Fed was, the CPI number really helped keep the market from maybe what could have had a bad day.
Yeah. Well, let's go to the S&P 500. That index ended with a gain of less than 1%, but decent close, kind of in the middle half of its range. But this doesn't look as extended as the as Nasdaq here, but it's still
It's still probably not quite extended. It's something you'd be noticing, but it's usually like when you get more close to 5% with the S&P. But yeah, and again, a lot of the gains for the S&P and the Nasdaq were on Apple and Microsoft and Nvidia. Just a few of the names like RSP. That was up 0.5, and it came well off its high. So that was just something. It wasn't as strong as the S&P, and hasn't been as strong for quite a while.
I noticed breadth definitely weakened as the session wore on. We were pretty strong after the CPI data, more than 3-to-1, almost 4-to-1 positive on the Nasdaq, and maybe 6-to-1 positive on the NYSE. But that shrunk quite a bit by the close. Now the two lagging indexes, we know the Nasdaq and the S&P 500 are outperforming, but let's take a look at. This is the Dow Jones Industrial Average. You mentioned really big days for Apple, Microsoft, and Home Depot, but a lot of stocks down in the Dow, and looks like a pretty ugly reversal.
Yeah, it's pretty surprising. I mean, obviously, the Dow is price weighted, not market cap weighted. If it had been market cap weighted, maybe we would have seen Apple and Microsoft propel the Dow higher, but it's not. So it closed slightly lower, and just above the 50-day line, at least on the ETF. So not great action. There's a lot of financials, a lot of measures in here. So yeah, it's just 30 stocks, but there are definitely some areas of the market that are not really powering ahead.
Right. Well, on the surface, 1.7% gain for the Russell 2000 might look good, but when you look at the price and volume, I mean, the Russell was up 3.2% intraday as that 10-year Treasury yield plunged after the consumer price index data. This index still looks a little wishy-washy here, trying to move higher today, but looks like sellers knocked it to session lows.
Yeah, and it's hard to get. Yeah, every time it makes a move, it was looking like, oh, here we are, gapping above and sort of breaking a trend line, or breaking some sort of trend line, and it really just faded off like that. It's just tricky. The 10-year Treasury yield obviously having an impact late in the day.
Well, let's take a look at that 10-year yield. It was a sharp drop. I know it was down at its worst, about down 15 basis points. You mentioned it closed off lows a little bit, which might have caused the market to come in a little bit. But I'm not sure what you can make of the 10-year yield here. If it's ready to still head lower or gonna start to turn higher again. But the bond market definitely liked that soft inflation data.
Yeah, and it was interesting because it crept up a little bit during the Fed and so on. It really picked up after Powell spoke, and it actually the markets, the Treasury yields sort of close officially at noon Pacific time, 3% p.m. Eastern, but in the final hour it kept on going. So even though here it's saying like 4.295 or 4.3, it actually was trading closer to 4.33 near the close. So that was one reason why there was that late fade into the day.
Got it. Got it. All right. Well, we got producer prices tomorrow. Market will be looking closely at that. Let's start by looking at some stocks to watch here today. Also want to take a look at Broadcom after the close because they reported earnings. But let's start with online travel firm Booking, BKNG. This is a company that's got one of the most consistent track records of growth out there. A big mega cap. Company, but nice little breakout for Booking today. I think it was stock of the day.
Yeah, stock of the day. And you can look at this a couple of different ways. You can look at this as a flat base, sort of an ugly looking flat base, and this was an early entry. Or you could view that same buy point as the official buy point to sort of this ungainly double bottom base with a handle. Either way, clearly was actionable today. The volume wasn't super strong to start, but it picked up. That was, I think, that was nice action, as you say. There's been some blue volume. The volume, when we do have above average volume in the last couple of months, it's been positive. There's definitely this pickup from earnings, and then it settled down and now seems to be trying to move again. So yeah, this one hasn't been rip roaring lately, but looking at a weekly, you can see strong performance for the past couple of years, really relative strength wise. So definitely
Yeah,
one to be
well, the
watching.
relative strength line looks pretty solid on the weekly chart. If you go back to the daily, we typically like to see that RS line shoot into new high ground when a stock is breaking out. But this is what sort of makes the market tricky at this point. You get these breakouts that look good, but then you kind of say, well, why isn't that relative strength line shooting higher with the stock? So maybe just a little bit of a caveat there. But you mentioned, volume came in nicely higher from Tuesday, and a lot of where a session where a lot of stocks closed well off highs. Booking was able to hold on to a decent gain today.
Absolutely.
Let's move on and talk about Fair Isaac, FICO.
Yeah, this is one of the folks that keeps like credit scores and so, and this has been
Mm-hmm.
doing all right. Now this one already technically had closed yesterday in a buy zone, holding that level just barely, but really, it was sort of still trying to rebound today. Nice pop, broke a trend line here. So technically maybe above this old buy point, but I'd say this was actionable from today's move. Even with today's close, it's still actionable. Nice move here. The relative strength line's not at a new high, but that's after a pretty long uptrend. And so, when a stock consolidates, when the market is hitting new highs, it's hard not to get the relative strength line to come down a little bit, but it's a little more forgivable there. You see the revenue growth and the earnings growth picking up in the latest quarter, really sort of trending higher over the last couple of quarters. So nice action here. Just we've seen this with a lot of stocks breaking out, coming up, coming back down, and moving back up again.
Let's go to the weekly chart. I believe Fair Isaac is one of these stocks that has a very good earning stability rank, which I think at one point it has been an IBD long-term leader. not only because of its strong price performance, but because of a consistent track record of earnings and sales, and you can see that firsthand. But that earning stability rank of 4, that's on a scale of 1 to 99, with 1 being the best. So Fair Isaac is definitely a fundamental giant here that's also showing pretty good technical action in this market. All right, well, we had that big drop in the 10-year Treasury yield that we talked about, and home builders were really taking off when yields were plunging after that tame CPI data. But I'll tell you, the price action in this group did not look so good by the close.
No. And so this was looking really strong, gapped back above the buy point, breaking a downtrend, gap up above the 50 line. And yeah, it held on to some gains. I mean, if you just looked at the closing price, you'd be okay with it. But disappointing. And like most people who bought this, and like it would have been anybody who bought the first hour, and it looked pretty good that first hour or so, it just sort of faded off from there. And it was just a disappointing action. It just shows you how tied it is to the interest rates. Now, yields, maybe this continues to bounce, but there were a lot of housing and mortgage and housing related names that faded off with yields coming up. So it shows you how reliant they are on those yields.
Yeah, I mean, we look at NVR if you want to pull up NVR, which is a high-priced home builder. Very similar action, tried to move above its 50-day moving average. Toll Brothers, luxury home builder. So the price action very, very similar in this group. Both NVR and Toll tried to move above those moving averages and got turned away. All right, well, I don't know if Broadcom has.
It is out. It is out,
Okay,
and
it is out.
it's loud and proud.
Okay. Well, we like that. Another these AI stocks have been really going gangbusters, and this certainly is an AI play as well here.
Yeah, they reported better than expected results, not massively so. Haven't seen the guidance yet, and I'm not sure if they've given guidance yet. They also announced a 10-for-1 split, which maybe isn't a shocker that they were going to split, given that we're starting to see that now. But nonetheless, big, strong reaction. This was in a buy zone the last couple of days. It's just you didn't know how this was going to go. I mean, there have been, especially given that we've seen positive action, you could have argued if this had not done well, we could have seen a 20% drop. So, but really strong action for the market there, nice big bellwether in chips.
Very good. Well, nice to see strong numbers from Broadcom. We're going to hear from Adobe tomorrow. That has been a real laggard in the tech sector. But it looks like Broadcom's results, at least giving the Qs a little bit of a lift in extended trading. I'm seeing the Qs up about 0.3%. So tomorrow should be an interesting day in the stock market. We'll have your back covered again Thursday after the close with another SMT video. But Ed, thanks very much for your insight as usually, particularly about the Fed. A lot of moving parts to the market today. So appreciate that, and thanks everyone for watching as usual. If you haven't had a chance to check out IBD Live, we get started right at the market open every morning and go for about an hour, 15 minutes, hour and a half, talking about actionable stocks and what is moving. Investors.com/IBD Live. Hope to see you there. Until then, we'll see you tomorrow after the close for another update. Thanks a lot for watching.